And so I ask you, Paul, in your grand wisdom, is what makes a stock a hype stock?
So first off, hype me and Mo and Seth by following us on Instagram. Secondly, I have a great analogy for a hype stock.
Go ahead.
What is a hype stock? It's like pornography.
Uh-oh.
Explain to me pornography. Is it just a naked person? Well, no, there's art that's naked. Is it just intercourse? Well, does that mean on TV? Is that a picture? But if I showed you some pornography, you'd be like, that's pornography. I can't exactly tell you what is a hype stock. But if I see it, I know it. So nothing I'm going to say is data-driven, saying this is exactly what a hype stock is. It's been here. What I sit there and say to people is if you go to all the YouTube channels and they're all promoting a stock, it's probably a hype stock.
That's simple, right?
If it's overvalued, it's probably a hype stock. If it keeps going up, not in line with fundamentals, it's probably a hype stock. If your 18-year-old neighbor who still has an acne problem because he hasn't taken Retin-A in years, and he's a virgin, is talking about the stock, it's a hype stock. If you go play golf at Firestone Country Club like I did, and your moron caddy talks to you about how Palantir is a great stock, it's a hype stock. If the 17-year-old caddy tells you that Tesla is a great company, I don't get it, it's a hype stock. If anybody who has no understanding of anything in the world, what's it called? Peter Lynch has the cocktail party analogy.
I love this.
If he goes to a cocktail party and people are telling him what to buy, he realizes the market's overpriced. If people are telling you what to buy because it's that easy to buy, it's probably a hype stock. If people are bored of it, like Intel's boring. It's selling at low valuations. Nobody cares about Intel. It sucks, blah, blah, blah. Very few people like Intel. Not a hype stock. AMD, it's exciting. It's changing the game. It's going to take over from Intel. Valuations are terrible, insane, but all the kids love it. All the Reddit users love it. Hype stock.
Do the greatest investors of all time invest in hype stocks?
They do. Carl Icahn, I think he invested in Netflix. I thought that was a hype-ish stock. Warren Buffett does not. Tends to not do that.
Yes.
But remember, hype stocks can have a lot of growth potential in them, and that could lead to good valuations on the road. I was wrong on Amazon for that same reason. I was very wrong on Amazon because I sat there and said, I don't think they're going to grow to the level they think they're going to grow, and they actually did better than that, which is very rare. So that was a hype stock 5, 6, 7 years ago, and guess what? It played out to fruition. So hype stocks are just stocks that are overdone in the market. If average people are talking about them, they're probably hyped. Because that's what it takes for average people to hear about them, is a lot of hype in the media. A lot of hype on the internet. That's what makes them a hype stock.
Can you pull up our 8-pillar software behind you, Paul, and show our new viewers, click on all pillars and show them a bunch of non-hype stocks they've never heard of?
And these are all the pillars that we look for, guys. For all the new viewers, this software you can get by clicking the link below, going to Everything Money. You get a ton of stuff with this. You get a Discord chat with 5,300 investors you can talk to, exclusive content just from us, and all the software for only 87 cents a day.
So while we're looking at a company, folks, much like buying a business, which is what Warren Buffett says, is you want to look at what they make, what they've done, what their future. We take a look at their past to sort of help us predict their future. And here's a bunch of companies that you probably have never heard of. These are the opposite of hype stocks. These are so, go ahead, Paul.
So here are the stocks. Marine Products, HP, Cummins, United International, no idea what that is, Labrador Iron, Magna International, 3M, Louisiana Pacific Corporation, Marine Max, Innoviva, Rush Enterprises, Hibbett Sports, Lazy Boy, Magna, all these ones, Herman Miller, Graph Tech, Best Buy. We all know Best Buy, Intel. We know those ones. These are all 8-pillar stocks. Foot Locker, Quest Diagnostics. These are boring stocks. That's why they're selling cheap. That's why they have all 8 pillars. Because the hardest part for any hype stock is to have a good valuation. And our first and last pillars are all based on valuation. And to have them, people tend to not like them. Because think about it, guys. If something is hyped, everybody wants to buy it. Everybody wants to buy the shares. What happens to the share price?
Goes up.
What happens to the valuation then?
Goes up.
Yep. So that's why valuations, my first order of business to look at a hype stock is what's the valuation? If the valuation is very, very high, it's more likely to be a hype stock.
Yeah, there's really no need for a due diligence, Mo, after the fact that you look at the market cap versus kind of what they make, right? It doesn't go much further than that.
And we run through it. I could do it right now. This is Nikola. It's just, this is such a good trend for, it's basically nothing. And then it skyrockets it within a couple of weeks, and then it comes down to nothing. You could pull up, let's look at Workhorse, same thing. I don't even need to.
Was it Nikola SPAC? Is that why it was nothing?
Yeah, but so many of them are. They're still hype, doing nothing, spike up, come right back down.
How about CCIV?
CCIV, let's see it.
Endless amount of videos about this on YouTube.
By the way, Nikola, September 10th of last year, was $37.57.
Yeah, here's that ZOM.
It's $10 now.
Look at that. Same thing.
If it has a parabolic chart like that, it's probably a hype.
Exactly. If it explodes out of nowhere, that's hype.
Because guys, think about it. How is it possible for a company to go up in value 100 times in a matter of months? Did the fundamentals
Or
change
weeks.
100 times in a couple of months or weeks? No. Just like if a stock falls like much, did the fundamentals change? In this situation, you'd be like, well, Paul, the fundamentals didn't change. Yeah, but it was already crap to begin with. So that's what you have to sit there and realize, like, are you sitting in a company that's just being ignored? If it's being ignored, it's not a hype stock. That's what makes it. Being ignored is what makes it not a hype stock.
So my second question that we get all the time, and we get in our Patreon and Everything Money community, is I am in these hype stocks.
What do I do?
What should I do now?
If you don't like them, sell them. Take your loss if there's a loss. If you don't like them, if it doesn't fit your new process, get rid of them. Absorb the loss, you'll be fine, you'll survive. If you have a new process that you believe in, stick to that new process. I don't believe in chasing to wait for breaking even, because sometimes breaking even won't happen. And the other thing is, sometimes the best thing to do is get rid of an investment immediately and put that money towards a good investment.
And the other thing is in all of these value investing books I've read, they're talking about really in life. Learn from your mistakes. Just take it as a mistake. You didn't know what you were doing. You thought you were going to just get rich quick. And obviously that doesn't happen, and you know that. So cut the loss, move on. You're going to recoup it in your lifetime because you're going to have a new process.
Paul, what if my process is my friends told me to look at a company, it's going up in price. And my process is I hope to buy this company on my little app, Webull or Robinhood, and hope that the ticker symbol goes up. What should they now be thinking?
Subscribe to our channel.
Listen to our channel if this makes sense to you. If numbers make sense to you and fundamentals make sense to you, and you're okay being patient while everybody else does well in these hype stocks.
Well, that's the hardest part, is the patience,
Of course.
Paul. It's just a patience.
Because they have FOMO out there. I believe in making errors of omission, not commission. You should be okay not buying a stock and seeing it go to the moon. But if it goes to the moon and you evaluate it wrong, learn from that mistake. What did you evaluate wrong? Maybe you evaluated nothing wrong. And like Amazon, I don't worry about it because Amazon did better than even the best expectations. I was valuing it based on, even if it hits its expectations, it's not going to be worth this. Well, it crushed those expectations. Oops.
A very common comment we get below is, number one is, Paul, this idea of just plain looking at the numbers is wrong.
Okay.
And then they always write this. Imagine if you would have bought Amazon and Facebook and Tesla back in the day.
So 30,000, 40,000 stocks have gone public in the last 50 years. They picked 3 that imagine if you bought them. Congratulations. Imagine if you bought all the other companies that went to zero. Because if you actually did that in 2000, bought all the hype.com stocks, 3 of them made 80%. Your money only doubled in the last 20 years. The S&P went up, your money went up 3% a year. The S&P went up 6.6% a year. And of that 3% a year, 3 companies made up that 80% of that 3% a year.
Oh, so you're saying
Apple, Microsoft, and Amazon.
If I went back and did pick the 3 winners out of 100 that lost.
If you picked all the ones that were hype back then, all the .com hype ones, the 3 that made it accounted for 80% of your profit. And that was Microsoft, Apple, and Amazon.
And it makes perfect sense. Look at the hype stocks that we just pulled up here. You're buying the new batch. So maybe 2 or 3 of these are going to turn out pretty well for you, but the 4 that I just pulled up, you own those, and they're not going to work out for you.
And Amazon's at $3,400 a share now, $3,300 a share.
Thank you.
Would you have ridden it from 113 down to 6?
No
Because that's
chance.
how low it got when you bought it here at 113.
And when it got to 6, let's say you weren't in it at 6. You weren't buying at 6 because you were like, oh my God, this thing just dropped 90%. I'm screwed. They're gone. They're going away.
The same reason when you see this chart going out to buy here, when you see this, you'd be like, I'm not going to buy it.
They're going out of business.
It's called recency bias, guys.
Served.
So if you're new, be careful. I did not hear this from Paul till I was about 37 years old. And so hopefully you're hearing this much sooner in life and you can make better investing decisions. And if this resonates with you, follow our channel and you can watch the almost 1,000 videos are coming up on. It's incredible. And if this doesn't resonate with you, then just go keep making those speculative bets. But please don't call it investing and don't quote Warren Buffett because it's neither, right, Paul?
I wish it was as easy as quoting Warren Buffett and saying, and life was easy.
You can quote him 4 or 5 times
Warren
a year
Buffett's
on earnings days.
Correct. And Warren Buffett's literally said, I teach everybody how I invest, and nobody listens. Okay, sounds good.
We're listening, so Paul. fondle a thumbs up as you tickle Paul's belly on the way out. And we'll see you on our Discord channel, at Everything Money Community. We know we love you. See you guys.